Herb, welcome. So who else do you think could be a candidate here?
Well, Kelly, when you start trying to think about who, you always get into that trap, right? Because you can go down a list of so many. Because one of the things, in fact, that it just attracted me to this idea, and also a reason I put this out to my readers. I basically said, "Hey, readers, okay, let's take a look at companies with recurring revenue because we think recurring revenue historically is something, especially if the stocks fall, companies may want to go after." Now, in this piece I wrote up, I just pulled a few out of thin air, right? Because they've tumbled, they have good recurring revenue, everybody thinks they're death. I am not saying I'm not speculating, we're just chatting. There are lots of companies out there, big neon lights on that. Let's just make sure about that. But several that I had in the piece, one was Chegg, which is the online education company. Stock just pummeled. But if you take a look at it and you look at the recurring revenue, and look at cash flow, and you look at all the things that are going on there, you say, well, that's interesting. Maybe it'll fit somebody's metric for what they're looking for. Or a company like Chewy, which, my goodness, it was, just again pummeled. And they don't actually have, I was looking at these companies, looking who has deferred revenue, who doesn't have deferred revenue. Chewy basically just talks about their subscription base. They don't actually have it the same way. And you just go back historically, Kelly, and you look at some of these companies and you look at times when things were killed, like Fitbit, when it was bought by Google. Or you look at, of course, everyone is using when they talk about Peloton, they're using Mirror with Lululemon, which was acquired. Again, a good installed base of subscribers. And one I really like, which again, didn't have the classic subscription, but revenue in that sense, but had a strong installed base, was Green Mountain Coffee, which I was on CNBC talking about negatively for forever until the stock was pummeled. JAB came along, Ricky Sandler at Eminence Capital saw that, got into saw long before they came along. He came in, he obviously saw that installed base, which was the equivalent of subscription revenue. So you have a lot of different mechanics here of companies that get pummeled, but have good recurring revenue, good revenue from business to business, which is really good subscription revenue, or also consumers, which is a bit of a leaky bucket, but still generates the cash that some companies may want.
So let me just get myself clear here, Herb. You're not saying that there's a problem with subscription revenue models as a business model, are you? You're just saying that these, and in fact, it was not that long ago that Wall Street was lapping up and loving and lauding those companies that had a dual revenue stream. They sold a product and then they had recurring revenue from the razor blades. It's that kind of thing. Or the cable television business. You had your advertising and you had your subscribers. So it's not that there's something wrong with the business model per se. It's just that the companies have gotten beaten down for one reason or another.
Well, as the stock markets gets hit and these companies that were trading at ridiculous multiples start coming in, you get stories like Peloton where people start talking about it. And what I'm saying is now's the time to start thinking about it, just thinking about it, because obviously smart people are, obviously bankers are. People are thinking about what are companies that need an exit at this point because the stocks may just start wallowing. And you look at something like a Peloton. I mean, I look at that story and I say, everyone I was talking to over the weekend was thinking, why would this story have been floated on a Friday? Well, obviously bankers or others are out there trying to, either, fly a trial balloon or perhaps people are talking their book, whatever the case may be. But that doesn't mean there really can't be some fire where there's smoke in a situation like that, because Peloton does have a strong installed base. And that installed base is something somebody will find value at a certain price. And the big question is, what is that price with any of these companies? So look, I think takeover speculation is a fool's game. As a guy who writes things, I think it's kind of interesting to write about. If I were an investor, I'd be starting to go out there. I had a guy write me just a little bit ago. He said, hey, Teladoc is a perfect type of a company that has that installed base. I look at Teladoc and I thought, that was a $300 stock. And now what is it, $20 stock? Is that? I have no idea if it's one, but I think this is what I think you're going to start seeing a lot of people doing if this market remains as jittery as it is and if stocks continue to remain low.